Three, two, one. We are live. Hello and welcome to PropTech Buzz, a business podcast where we talk to PropTech founders and CEOs from all over the globe and learn from them how to build and scale successful PropTech companies. Today, it's my privilege to welcome Kaustuban Rajagopal, who's the founder and CEO of Clutterfree. And when we introduce him, he's going to take us through his career trajectory of what his career trajectory has been and his transition story of building Clutterfree. But before we welcome him, it's a plea to all my listeners out here, all my audience out there. If you have been listening to us and if you like our content, if you have still not subscribed and liked our episodes, please do that, because the more number of people subscribe, the algorithm helps us reach to a wider audience. PropTech is anyways a niche sector, and we would appreciate the word going out to a broader and broader audience. So please do that. Also, if you like the audio only content, you can go to Spotify and look for PropTech Buzz and hit the follow button there as well. With that, let's welcome Kaustuban. Kaustuban, welcome to PropTech Buzz. How are you doing today?
Yeah. Thank you, Ravi. I'm doing good. Thank you for having me in the show. And it's good to be here. I think it's been exciting. I saw all we've been following your previous videos and podcasts, and I think it's been really informative. So thanks for having me here.
You're welcome, Kaustuban.
Thank you.
So, as I said, before we get talking about what clutter free is, I would really like to know, to set the context. It would be great to know a little bit about your career trajectory, your formative years, and how did the transition story of building clutter free happen?
Yeah, absolutely. So to make it really short, the thing is, I've been in the financial services and wealth management and investment business for the last 20 years.
Got it.
So it's been completely wealth management business, right from life insurance to mutual funds to then PMS, AIF, and then fractional investing into property. It's all been financial products. So the first 10 years of my career was into large corporates like Reliance AMC and ICICI Prudential Life Insurance and so on. And the next 7, 8 years was into startups where we are into fractional property investing, real estate investing, and so on and so forth, and setting up that business. Now, so it's been a mix of that, and then the jump into being an entrepreneur, right? So this has been like the three phases. So from a typical large corporate into a startup, and then transitioning into business. So that's how, and yeah, that's been the typical transition. Yeah.
Got it. And then what led you to build clutter free? Also, very curious about the name. It caught my attention with the name. What's with the name, and what led you to build clutter free?
Absolutely. I think with the name, I think there was a lot of reading on minimalism around 2014-15, and that in turn led to naming the firm Clutter Free. And then I thought, whatever services we take, it would be great if if the entire service is clutter free from a customer standpoint of view. So that's why we named it Clutter Free. Yeah. And yeah, and also in terms of what prompted us to get into this type of business is basically, I think we've been in the wealth management space all through our career.
Well, I think I lost Kostuban for a while.
Ravi, can you hear me?
Yes, you're back now. I lost you for a second.
Oh,
Yeah,
is it
maybe
okay?
you can begin that. You said you have been in the wealth industry all your life,
Yeah.
and
Yeah. So we've been in the wealth management industry for the past 20 years. So when we look at real estate as an asset, um, all through about 20 to 30% of the clients' wealth, even HNIs and ultra HNIs, only whatever be the penetration, only that much is into financial products. 60 to 70% of the wealth still remains in physical real estate, not even in the form of paper, right? And people are really comfortable holding that. But when we also looked at that 60 or 70% of the wealth, when you look at this 20 or 30%, every fund they have, what's the asset allocation, the percentage allocation to each and every fund, what are the returns that are being generated in each and every fund is very specific. And they also track if each and every specific fund is doing well. Whereas the 70% of the portfolio, which is real estate, is not being tracked. They don't have a portal where they can log in like their net banking or their mutual fund portfolio through their wealth portal, where they can see, hey, you know what, I've been holding this property for 5 years. I thought the rental yield would be 5%, but then it is only 1.5%. So I need to get rid of this property. Or has there been capital appreciation in the property? So this has not been done for property, which is majority of assets that they own, right?
So
So
in spite of holding 70% of their wealth in properties,
yeah,
they do not have a way to
yeah,
manage and control and get information about. Okay.
absolutely. There are two reasons for it. One is somebody doesn't want to disclose the entire wealth to someone. It's like 70% of their portfolio. Even in wealth management, typically when a client comes up, let's say when a client has 100 crores to manage, they typically give you 10 crores initially, 10 crore rupees, right? And
Mm.
then they see how you perform, and then they give the next 10 crores and the next 10 crores, right? That's how typically how it is done by
No,
clients.
I do not know how it is done. Okay, I'm still not yet HNI, but you need to tell us, because I think this is standard for you, because that's your
Yeah.
familiar ground. But is this how it happens? An HNI would actually give a very small pool of capital to manage before he can trust you with more money. Is that how it is?
Yeah, so overall, it's true in the sense there are times when the HNI likes you in the first go and they think you're really professional and give you the entire funds, but that's rare. The
Mm.
normal way to do it is a typical HNI is normally dealing with two, three wealth managers. He's not even dealing with one,
Got
right?
it.
And then he sees who's performing well, and then he sticks to one and gives majority of his financial portfolio to that person. That's typically how
Got it.
HNIs and Ultra HNIs work. Mostly Ultra HNIs work this way, right?
And
They
where
might
do
have
sorry to interrupt. Where do they find these wealth managers? Like, how do they pick? What's the criteria to look for wealth managers?
So they'll also look by size. There are some really large. There are these private banks who are also wealth managers, and there are some really large institutions where the minimum ticket size for entry by itself is 25 crores as a portfolio,
Mm.
right? And then there are these private banks which start from 5 crores portfolio, financial portfolio. I'm talking about financial portfolio from 5 crores.
Right.
And there are many wealth management firms available. I think I think every bank in turn is a wealth manager also. Once you cross a certain threshold of, once the client crosses a certain threshold of wealth. Now, so can we create something of that sort for the a similar wealth management for real estate, right?
Mm.
So which property to hold on to, which property to dispose, and then what we also realized is what we also saw with data is some of the worst decisions or worst investment decisions are taken when people sell a property, especially a property that is done well. They sell, and then when they flip and want to reinvest that for capital gain purposes, that's when they're in a hurry to invest in the next property. There's a bad decision taken. So we also
Mm.
help them with the reinvestment process. And and if there is no reinvestment, generally what happens is typically when you're a product or a service company, most of the companies for the sake of the business, there is something that they get into. There's a product that they get into. So we might advise them not to get into any product at the moment and wait for it. Pay the taxes, and then probably when there's a good deal, get into the next deal. So that's typically how we want to do it. So for instance, right now, we wouldn't want I mean, as we all know, the equity markets and the property markets have been hot for 2-3 years, and we
Mm.
all know the markets are like not always going up, right? There is like a cycle, right? And last 2-3 years, things have been going up. So now you're starting to think when it's going to flatten out or have a little bit of dip. That's already in the corner of the mind of people, right? Is this
Right.
the point in time when we go and tell people to buy more, or is this a point when we tell people to hold on to cash, right? So I think these are things that are not done generally. So what if somebody can tell a client not to buy now, right? Hold on for a 6 month period or 1 year period, and then we could probably look at investing, right? Or purchasing more, right? So on and so forth. Or if there's an opportunity where, for instance, we get a property which is like 30-40% discounted from market price, and also in an area which can potentially grow. So when that happens, we typically get into those type of properties where we don't typically have to take a market call. So how we look at market call is we call it hoping and praying, because to hope and pray is to say, that area is going to become this tomorrow because of all the social and civic infrastructure. But then there is
Right.
just hope and pray, because you don't even have the control of knowing whether the social infrastructure is going to come up on time, especially
Right.
in India, and so on and so forth. Right? Yeah. Yeah.
Got it. So what makes you? So I saw the problem space that people are not managing the real estate. So what's the solution space? Okay, I understood the problem. Now let's talk about the solution. So what is the kind of solution that you're offering to them?
So yeah, sure. There are two areas. So one is we're going to be in the primary market. Clutterfree CIrCLe is going to be in the primary market, which is basically real estate broking, right? And primary and secondary market. So primary market is tying up with all these builders and offering products that we feel are at a good price point and in
Right.
good locations. That's typically the regular real estate broking business. Then you have the secondary market, where typically we have people who have properties worth $1 million plus. So let's say in Indian rupees 10 crores. 10 crore plus. Apart from their primary residence, they have this level of property, and we can help them with the entire planning of the property. 10 crores to be, it can be ranging from 10 crores to 1,000 crores, right?
Right.
So we manage their property for them. So now, how do we do this? Why do we do the primary market and the secondary market, and why do we do this? Why can't we just help these 10 crore to 1,000 crore people manage their property? Now, the
Right.
reason why we're doing this is data. So one of the things is, every now and then we see in real estate that every 100 deals that you look for, you get one deal that is phenomenally good, right? And it's actually this part of the job is offline. You literally go street by street, check the prices, enter it in your system, and in every area has different pockets. It's not like one specific area has a rate. In that area, there are different pockets which have different rates. So record all of that, and then every now and then we get one of these properties which are like which is like deeply discounted. So now, one is that, can we offer that as a product to one of our clients at a premium? So we would like to call ourselves like a premium service, right? But if we could get a 30-40% discounted price, I think the client is also ready to pay a premium in terms of your fee and so on and so forth, right? So that is one. And also managing. When I say managing, we don't want to get into rental property management on a day-to-day basis, but also just tracking, asset allocation tracking. So if someone has 10 crores in real estate, where is this? Is this diversified? Is this in like one city? Let's say it's a 50 crore portfolio, real estate portfolio. Is the entire 50 crores in Bangalore or Mumbai or Chennai? Can it be diversified into 2 or 3 cities? Can it be
Mm.
divided into residential and commercial? Why only residential, right? So all of this work. So we have a back-end software team, so which collates all this data and presents it to the client in a way that a client can day-to-day decide. And we'll have a private banker. A bank has a senior private banker who's like a wealth manager. We'll have a senior wealth manager over here, who will in turn advise the client on what to hold on to. It's not that all the assets are have to be we need to do something about all the assets. Some of the assets might be doing really well, which he already owns, so retain them. And what about the balance?
Mm.
What do we do with them? So that's typically how we would want to work. And also, we also sometimes, for instance, we are tying up with a developer now,
Mm.
where we are signing up a 800 crore. Most likely, it'll happen next week. That we are signing up a 800 crore project for exclusive marketing.
Mm.
So while doing the exclusive marketing, we are also getting into the design of the project. We have a complete design team, from NID Ahmedabad, headed by someone from NID Ahmedabad. So we get into the design phase of it, right? Right from the model house. So we are completely into it. Although we are just a marketing agent for that property, we are
Right.
getting into it because we want to service the one is the developer, and we want to keep in mind the interest of the client, and we want to do whatever we can to ensure this project comes up really well. And also, what happens is, in such type of deals with developers, this is where the discounted properties really come. What's been happening traditionally is, one is the developers pay a commission to the to the marketing agent or the marketing exclusive marketing agent, right? That is one way of income, which is a fixed fee. Let's say it's 5%, 6%, 7%, depending on the specific deal, right? Now the other thing is, developers normally come and say, hey, you know what? This is the price. Anything above this price is for the marketing agent. That is
Mm.
also done. So when such the and why do they do this? They typically do this in the initial phase of the project because they want money to do the model house, the sales and marketing office, landscaping, So they want this money to do up all of this. So when they need this money, typically what has been happening in the past is the marketing agent, let's say instead of the typical 4-5%, there might be a 10, 12, 15% or 20% bump up in the earning if they are able to get mobilized funds in the beginning. What we are thinking is we'll hold on to the same 4-5% or 6% fee. We will pass the discount on to the client. Now, what happens then is a client is getting a property which is about 20-25% discounted from the market rate at that point in time, which
Right.
is based on our study, not based on the developer study, right?
Got it.
If that can happen, there's a clear 25% bump in property prices. A property that is, let's say, we all live in a house. If the same property is given at 75, it's a great deal. We all know that. If we can
Right.
provide all the data, uh, you know, uh, for saying it is actually 75, then I think it is a good value proposition for investors as well. So it's a combination of we doing this marketing, which helps us getting all the data, which in turn allows us to see if a deal is a good deal and also offer discounted deals, which we call clutter-free one. We are calling the clutter-free one, where we offer it to clients who can, who have deep pockets and can invest multiple properties. So we have a bunch of 200 people whom we are associated with who have deep pockets, let's say, a large chunk of funds that which they can park every now and then when there are good deals. So that is the other side of our business, which
Hmm.
also brings in liquidity to developers at every point in time, when there's a good project. So typically we don't want to get into any projects which are pre-launch, for instance. That is when a developer, when does he typically need money? Developers need money at various points in time, but the most is when they're about to purchase land,
Hmm.
right, at the initial stage. And that is the riskiest stage, right, to fund a developer when they're buying land, because there's government approvals, there is not much in control, uh, you know so we wouldn't really want to get into any deal where we are getting in at the land stage where the developer wants to buy land, because we think the risks are very high. But then we want to get into deals which are post approval, post plan sanctions, post all the government, because that is the uncontrollable factor. Then you have the risk of, will the developer, is the developer good, will he develop the project well, happy when people pay money, is he using that for construction, is he diverting the funds into other projects,
Right.
or is he looking at another project, saying that typically what do developers do, why do projects get delayed?
Right.
Developers divert money into other projects, they buy newer parcels of land.
Right.
Or the other thing is, they have to pay back some debt which they've taken in the past, so the
Right.
funds are diverted into that. How do we
Right.
take care of all of these things? I think so when we have all these answers, so typically when we get we get requests for funding and marketing projects on a literally daily basis. So
Right.
our ratio is, if we get 150, 200 projects, we might probably do one deal.
Got it.
So our daily job is to say no. That's our daily job in one side. Yeah.
Got it.
Yeah.
Got it. What? So when there are wealth managers who are offering such services, what does a good wealth manager distinguish himself from the others? Okay, what is it that you bring that makes you better or well differentiated than others? Is there first of course there is a domain expertise, but is there any tech play here as well in this entire scheme of things? Maybe help us understand what's a good wealth manager than a mediocre one.
I think one is a good wealth manager, as I say, like in any business, one is there's a will issue and there's a skill issue. If somebody has a will issue, then that's a straight strikeout, right? I think skill is another thing. One is the experience and the level of kind of products that you offer to the clients at every point in time, and the ability to read markets. So the wealth management business is moreover an expectation management business more than a return generating business, right? We all know, for example, the stock markets, we all know that the stock market over a longer period of time, generates a certain level of returns, right? But nobody is in control as to what the returns are in a specific period of time. Nobody knows. If somebody is telling me that they're going to predict what's going to happen in the next 2 years, probably you're not listening to them post that, because nobody can predict what the markets are going to do, right? If somebody knew that, they were not going to be sitting and talking to someone, they're going to be picking up stocks or shorting them or buying them, right? So predicting markets. So when I see even the wealth management business, the credibility of wealth managers is generally high compared to a real estate broker. But
Right.
even in the wealth management business, I think Even now, there's dearth of good quality advisors because people are predicting markets, right? A really good wealth manager doesn't really predict markets. He says this is what has been in the history
Right.
of the markets. Let's say the market provides 15%, the index provides a 15% return. My job is to provide 2 to 3% more. That's what a typical and there are years when the portfolio is down minus 10%, right? There are years
Mm.
minus 10-20%, like the COVID 2020, 2008, and so on, and 1999, and so on and so forth. A good wealth manager's job is to keep the client informed already that this is a good time. For instance, this is a good time. It is
Mm.
to tell a client that there are bad times that are going to come. It's not a one-way direction where you're going to keep growing in terms of you will going to grow in the longer term, but in the
Right.
short run there are going to be these curves. It is very important to keep them informed and then constantly work on asset allocation. For instance, somebody who had a 50% in equity in their portfolio, for instance, about 3 years back, now probably would be sitting at 70-80% in equity just by the portfolio growing, right? Just because of the equity markets running up. So, a good wealth manager's job is to say, let me sell some of this equity and then bring it down to again 60-40 or 50-50 again by selling some of the equity.
Right.
So periodic review of the entire asset class and then taking the client's interest in the interest for a longer term, right? So one is to be transactional. So one is to be transactional and say, um, uh, one is to be transactional and sell insure certain type of unit linked products which are like high on commission. The other is to give products which kind of are in tune with the client and the wealth manager over a period of time. Obviously, from a wealth manager's perspective, all these kind of products where the client makes a lot of money over a period of time are very less, and the remuneration for the wealth manager is very little. It's as low
Got
as 40 basis points,
got
right?
it.
So it's not in the interest of the business to give these products in the short run, but it is in the interest of the business or a longer term to, you know, so typically big wealth managers and wealth managers who've been doing well are
Right.
people who keep the client's interest in line with their own interest. Yeah, it's a long term view. It's a long term business, and also the good thing about wealth management business, it's an annuity business where you keep getting money, revenue like
Mm.
continual revenue over a period of time.
So help us understand the business model of primarily on. Yeah, before I go there, is there? So last time I asked you, you said that there is some tech play there in terms of how they would manage the real estate portfolio and properties. Do you want to shed some light there?
Absolutely. So one is the area where we get this proper. So we are associated with about 20,000 distributors across the country today. Now, whenever there's a property and whenever we get data about a specific property, there's a back-end team working on crunching the numbers, right? So typically now it's manual. At the moment, we are doing it manually to see whether a deal is good or bad, right? But what we are also developing is to see if we can have sufficient data to pop up, whenever there's a deeply discounted price, right? And that's an opportunity to buy at some point in time. So that's something that where we are getting in the tech angle. And also obviously the entire customer interface of how one can just get into their net banking sort of a portal and then say I want to sell this property or I want to buy now and this is my budget, right? It's as simple as that. I am looking at buying something for 2 crores or 5 crores or whatever it is, or I'm looking to sell this property right now. Or do
Mm.
you think it is good to sell or hold on? If I can just click on a button.
Right.
Now, the interesting thing about this is it's like this. So, majority of the wealth is held by people in the age group of 50 to 70 at the moment.
Mm.
Now, they don't really want tech. They want a person going there, meeting them. They don't even in fact want to meet over the video call. They would prefer a physical meeting, right?
Got
So 50 to 70 is the age group which has the maximum amount of wealth. They are the ones
it.
who own these properties, own this wealth. Now and
Got
then you have these startup founders, which form a very small percentage, right?
it.
And typically the younger ones don't have a portfolio very skewed into real estate. Typically the elder ones have this.
Right.
Now we'll have to nicely transition. We'll also have to serve this 50 to 70, where we give personalized service. There's a person to go meet, pick up the documents, do that work, and then we have this age group of 30 to 50 where it's completely tech. So we'll have to kind of cater to both, right? So, and typically when you look at HNIs and Ultra HNIs, they want personalized service. They typically don't want to go search online or they typically don't want to go online and do stuff, although they would want to have that option as well, you
Okay,
know. So that's typically how we are trying to build it, right?
got it.
And even this 50 to 70, slowly what's going to happen is over a 20, 30 year period, that those assets are going to be transitioned into people who are 30 to 50 today. They're going to be 50 to 70. But then these
Hmm.
people are going to be, like us. They're going to understand tech. They would appreciate the fact that there's tech. So I think we have to go through the transition over a period of time.
Got it. You mentioned about annuity. What is the business model of usually wealth managers, real estate wealth advisors, and stuff like that? How does the transaction happen with their clients, and how do you make money?
Absolutely. So with us, so we are calling ourselves a real estate wealth management firm or a real estate family office, you can say. So typically in wealth management, when it comes to financial assets, it's an annuity business. But as far as we are concerned in real estate, it will not be an annuity business, but I think it will be a continual business because you have a relationship with the asset owners, which is the
Mm.
owner of the property, right? So we kind of have a continual relationship in buying and selling and so on and so forth. So one area is where whenever we see good opportunities to buy primary market deals from developers, we go ahead and buy that. So that is one revenue model we have. The second is secondary market, where we typically concentrate on properties above 4 crore rupees, half
Mm.
a million US dollars. From there to about 1,000 crores. So how do we resell those assets for the clients? That is one. So straightforward, vanilla, plain vanilla real estate broking. And the other one is where we have Clutterfree One, which gets these deeply discounted deals, and the data for that comes from these two. Although these
Right.
first two businesses seemingly are very fairly simple, the data for that comes from these two, and
Right.
then we are able to pick up properties at deeply discounted prices. So Clutterfree One might invest on their own. We might invest our own firm, companies' funds, and also if there are large deals, let's say the 300 crore deal where we have to pick up 300 units of 300 apartments, or let's say 150 villas, then we
Right.
would need other partners also to come in and financially invest with us. We have the financial wherewithal up to where we can, have people in the range of 500 to 1,000 crores come in with us as partners, financial partners, and invest. That's the ecosystem that we are building and have built.
Got it. Help us understand the market opportunity here. It's huge, I know, but give us a sense of the scale of this market that we're talking about.
So when I looked at premium services that are being provided, to be honest, I couldn't really think of a brand which is providing a premium service, which is providing broking and this thing. I mean, on the top of my mind, one of the developers actually asked me this question: can you think of a secondary market broker or primary market broker apart from the IPCs, right? International property consultants. Is there anyone who's a premium property broker? It's a tough market to crack, and we're also hoping that we build that system. So it's the opportunities we get out of this office or the room. eh, every property is an opportunity, right? That's the business that we are in, right? So each and every property is a so that's where it is. But also when you look at where we would want to go, why are we servicing the really high ultra HNIs and HNIs today? Now, at some point in time, we would also like to democratize it and give these discounted properties to a retail investor at some point in time. But then,
Mm.
if we start retail and then scale, we'll have to raise venture capital funds, go through the burn and then build the business with it. By building it through this route, we become a self-sustaining business, and then we are able to service through our own funds the retail client as well. That's the route that we are taking.
So
So maybe
you're
maybe
taking the, just like Tesla was, right? So Tesla
yeah,
came up with a premium car. They made the margins, and then
yeah,
with that margins, they went mainstream with
yeah, yeah,
budget friendly cars. Okay,
absolutely.
I get that. But you still did not give me the numbers, right? Of the potential here. You said every building is an opportunity. But
So
what?
in terms of numbers, right? I
Yeah.
can't give you a number, but all I can tell you is the primary market to secondary market ratio today. Our primary focus might be on the secondary market, which are asset owners. All I can tell you is the distribution of these numbers is today in India, 70% or 75% of the transactions are in the primary market.
Yes.
25% of the transactions to 30% are in the secondary market. Now,
Correct.
slowly, as we develop over the next 10, 15, 20 years, I think this is going to switch, right?
Yes.
And while people are focusing on the primary market, I would like to assume that we are one of the, for few to focus on secondary market as well at the same time, and then
Got it.
hopefully that grows, and then we have a decent. I don't think the question of market share comes over here, as you would know, because market share of even the largest players are in single digits or lesser
In
than
the
single
sim,
digits, right?
yes, yes,
In this industry.
and that is so exciting because that
Yeah,
means the
yeah,
it's up for grabs for anybody who wants to be there.
absolutely,
Um,
absolutely.
so you mentioned that there are you cannot name any brands in this space, but still, do you think there is any competition? Like, how is the competition in this space for you?
So there are a lot of people who are doing broking as a service, and typically in India, all of them have been positioning themselves as more one of the value for money and being cost effective. We are in fact positioning ourselves as a slightly expensive brand who will get you good deals and give you great service, right? Typically,
Mm,
like a Oberoi hotels or five-star hotel, right? That's typically how we are positioning ourselves, and
right.
we find that there is a gap there. There is not someone who's saying, "Hey, you know what? There's value for money," but then we are like a percentage or 5-10% more expensive. We are openly saying that, and then that's how we are. So we find that there is a gap when it comes to premium service. So I can't think of many who are saying we are slightly more priced at a premium when it comes to not the property prices, but our own service fees are a little on the premium side. And the reason for the premium is there is personalized service, there is tech, and I don't want to say we have come up with some idea which has not been existent. It is an
Mm,
this is a sort of business that has been running for 100,000 years, right? It's not a
got it.
new business idea. But then
Okay.
nobody has been putting them out. So, no brand. There's no brand. There are individual brokers who are large who've been doing this, but then
Right.
there's no brand which has said we are a premium service provider. There are not many. I can't think of many like that.
Got it. Maybe it's again just to satisfy my curiosity. How do you build a brand here? Like you're a premium service provider. Is brand built by spending money on the branding, or I mean, you can choose not to ask it, not to answer it. But yeah, maybe it's your secret sauce. How do you build a brand and position yourself? You also raise some money. I was also wondering, in this business, where do you invest the money in? Is this because I do not see, I mean, I am too naive to understand the dynamics of this industry. Where would you put the money in? But maybe you could answer those questions.
So one is you invest on people. I think that's where you build a brand over here. You
Got it.
invest in some great people, and I think that's the route that we are taking. At least I can
Hmm.
talk about ourselves at Clutterfree. So we are investing on people heavily, right? Hiring some, hiring people who can probably go behind excellence, right? That's what we are looking at, and that's the kind of team that we have right now.
Right.
And those are the type of people that we are looking for. People who just want to go for excellence. Now, how do we want to build a brand? At this point in time, if you ask me, so if we chat probably after a couple of years, I might have a different answer, right?
Yes.
But at this point in time, how I would want to, for instance, the deal that we are signing right now, the 800 crore deal that we are about to sign, there is a certain chunk where we are getting it at a deeply, discounted price. Now, when we get it at a deeply discounted price, the way to build credibility is to actually, let's say we only need, for example, for the deeply discounted role, let's assume that we only need like 20-30 large investors. The point is to communicate that to about 1,000-2,000 people, so that people are apprehensive when you get a great deal. People are generally saying, is it too good to believe? That's the first reaction, or something must be wrong, right? I think if we can build that trust with these bunch of people, with this audience, saying that, hey, actually this was actually a great deal, and we came up with this about 6 months back, and you can track the entire deal. You need not really put in the money now. You can track. So if we have a wide audience, and we can have, our thing is, if we can have like 1 million people knowing that we are getting great deals, I think we've built a brand just by showing them the value in the deals that we bring, right?
Hmm.
I think that's the initial phase. I think post that we'll get into probably building a brand by spending money on advertising,
Right.
marketing and all of that, probably at a later point in time. But right
Got
now, we although we've raised funds, we would like to call ourselves bootstrapped. So that's typically how we want to function, right? Be extremely conservative in terms of the spending that we do in any other area, but then
Hmm.
one area where we would want to spend a lot is on human resources and the people and the quality of people that we associate with. That's something somewhere we would spend a lot on training, on getting good resources. That's where I think we are spending most of our money at the moment.
Okay. Now, since this is a business podcast, I am often curious, right? So there are other entrepreneurs who might be listening, who might have bootstrapped as well. But primarily, brand building is such an important concept, isn't it? It's all the premium. So when you charge your services for a premium, it cannot happen at the cost of a brand, right? So that becomes very, very important, and that's exactly why I asked you these questions. Since you are in this space, where do you see this space evolving? Do you see any disruptions coming in where real estate advisory or real estate wealth advisory is going to get better or disrupted, say with the help of technology and AI and stuff like that? Do you see things changing, evolving?
Absolutely. So, as far as real estate investing is concerned, over the last 10 years, we've seen some phenomenal fintech firms or prop tech firms which offer fractional investments, which offer all sorts of deals, right? There are companies which offer 1 square foot purchase. There are companies which offer fractional, property, tech park ownership, and so on and so forth, right? There are multiple companies. So, I think there are about so many firms today, as we are talking in India, which are into all sorts of these businesses. Now, one of the things is we are actually excited about that part of the business as well. But one of the things that we want is we would ideally want to get in when there is regulation. Till then, we would typically want to be a brokerage firm which charges a brokerage, and then the funds go directly to the developer. Now, the moment or to the party, moment there's a regulator, there's an entry barrier, right? So real estate, when we see, is a overall is a very unprofessional setup. If you look at in India, especially, it's a very unprofessional setup, right? So, commitments are not generally kept by most people in the real estate industry. So now, especially the developer community, right? Well, that's why clients are really scared of putting in money. Only the category A builders are the ones who get all the 80-90% of the money because of that reason, right? People are skeptical putting in money into any other. So now, if there is a regulator that comes up for the financial services part of it, basically making it a financial product, once the regulator is there, I think we'll be comfortable getting into that as well, because we are able to structure deals and get into deals and identify good deals. But also, we don't want to get into that business till the time there's a regulator and we can be a regulated product.
Hmm.
And the other flip side of having a fund, we also thought about that. We don't want to have a periodical invest. So when I have to personally invest, I'm not looking to invest in property every month. I invest in property like an SIP, right? I'm looking to invest in property when there's a good deal. When there's no good deal, I want to sit in cash. So we
Hmm.
want to actually kind of give the client the same option to say, hey, sit with cash. I think that also builds credibility from a brand perspective, because nobody's saying, hey, you know what, sit in cash, don't invest anything right now. We are okay if the money goes elsewhere. But then I think over a longer period of time, we are building credibility with the client and saying, hey, you know what, I don't think it's a great time to invest over the next 6 to 8 months. Hang on,
Got it.
right? I think, let's not get into a deal just because we have funds right now. I think
Got it.
that will be a differentiating factor. Yeah.
Got it. So where do you see, so now that you have funds, you got yourself kickstarted, you're building um, top notch team. What's next? So what are your early steps? How does the next few months to 1 year look like for you?
So we are right now servicing clients in Bangalore and Chennai.
Right.
These are the two cities we are operating out of. But there is a lot of interest in Pune, Hyderabad, and also Mumbai.
Hmm.
So we are also over the next 1 year's course, probably we are expanding to these cities and probably also to Middle East and Singapore. Middle East and Singapore and in the US more from a investor standpoint of view, but from a property investing standpoint of view, it's going to be Bangalore, Chennai, Hyderabad, and Pune. And one of the things, so it is actually at the moment, I would say we are investing in these locations. And the reason for this is this. So primarily when we invest in property, how do we choose a city? Which city do I invest in? How do we choose a city? Now, you look at population growth over a 10-year period, a rate at
Right.
which population has been growing, which is pretty much good in all Indian cities, top tier cities, it's pretty good. Now, the second is you also look at median income levels of each city. The third is you look at average price of property, or So that basically tells you how affordable the properties are. Now, if you look at a city like Bombay, so we might probably not invest in Bombay at the moment.
Mm.
Reason being, the median income levels, the ratio, one important ratio to look at in real estate is median income levels of the property to income levels of people to cost of property. So in Bombay,
Mm.
typically it is about 16 to 20 times, which means it's not affordable. One can't take a home loan and really buy a property. If they do,
Got
they'll have to buy 40, 50 kilometers outside. But then the other side, of the flip side of the argument is there are a lot of people who have money in Bombay, so they keep buying property. So prices are going up, and prices have been going up. But then that's not fundamentals. We don't want to take a bet. If you look at the maximum sales that has happened, it has happened in Bombay, right? In
Mm.
the last 2 years, maximum number of units. But then that doesn't mean the fundamentals are in place, right? The second is if you look at cities like Pune, Bangalore, for instance, then Hyderabad, Chennai, the typically this ratio in Bangalore has one of the highest median income levels, thanks to all
Mm.
the high-end IT jobs, with all the large brands. Now, because of that, and the property prices, one can still buy a three-bedroom apartment at 1.5 crores. So it's not very high, one and a
Correct.
half crores. Now, when this happens, the median income level to cost of property is only 6 times or 7 times, which means
Mm.
properties are affordable. One can take a home loan and buy properties. So
Right.
our expansion will be determined by one is where can we invest in properties and where do these fundamentals work, and the
Correct.
other side of it is where are majority of the wealthy people there, where can we raise funds from. So these are two different sides of the business. Where we
Correct.
invest would be basically these kind of cities. Where we
Correct.
would probably collect money and have investors from would be from some of the major cities and towns across the country, and our
Correct.
clientele would be major. A lot of NRIs would also be, I'm assuming, our clients
Got it.
over a period of time. Yeah.
Correct. Excellent. Well, this brings us to the end of a very, very fascinating conversation with Kostuban. Kostuban, thank you for sharing with us your wealth of knowledge and wisdom. Your experience comes through, and that's exactly why you have won the confidence of your investors. And it's we're closely look at your journey, and then maybe in a year's time to see where clutter free grows. We invite you again to share. Um, the next phase of your journey with us. Thank you so much, with Kastuban.
Absolutely. Thank you, Ravi. It was wonderful chatting with you, and look forward to catching up and chatting again soon.
Thank you so much. See you around. Bye bye.
Bye bye.